Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we talk about 3 stock ideas from Karvy to consider ahead of the election outcome. Now friends, if you have not already become members on our channel, please click on the blue join button below and follow the steps. This will entitle you to member-only privileges on Profit and Equities. Also, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you are not yet a subscriber on this channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Please watch this video to know more. Now the first stock on the list is Mahindra and Mahindra Limited, which is available at Rs 628.75 and the face value for it is 5. The symbol for it is M and M. Now Mahindra and Mahindra Limited is engaged in the manufacturing of passenger cars, commercial vehicles and tractors. Now the company's tractor business would benefit from a pickup in the rural spending by the government. Also a revival in auto sales is likely to benefit the company. Now as is evident from the 1-year chart, this company has not really been an outperformer and a lot of wealth has been eroded here. The market cap of the company is 78,165.73 crores, which means that this company is a large cap one. The EPS of 40.27 translates into a cheap price to earnings ratio of 15.61, which is also very cheap when compared with the industry PE of 23.34. The price to book ratio of 1.73 is also on the cheaper side. The company has a dividend yield of 1.19%, whereas the promoter holding is a disappointing figure and stands at 21.51%. Also 2.84% of the promoter's holding is pledged. The 52-week high and low for the stock stands at 993 and 615.60 respectively. Now the second stock on the list is ITC Limited, which is available at Rs 297.75 and the face value for it is 1. The symbol for it is ITC. Now ITC Limited is a holding company which is engaged in the marketing of fast-moving consumer goods. The company operates through 4 segments, which are FMCG, hotels, paperboards, paper and packaging, and agri-business. Now as is evident from the 1-year chart, this company does not have any definite trend and has been consolidating at almost the same levels throughout the entire year. Now Karvy believes that the government will need to pay attention to the rural sector, which should help improve rural consumption. Companies like ITC would benefit from this focus, and in addition, there should be a recovery in consumption growth in urban areas. They expect the organized sector to continue to benefit on account of increased formalization of the economy. Now looking at the financials, the company is a large cap with a market capitalization of close to 3,65,000 crores. The EPS of 9.72 translates into a price to earnings ratio of 30.63, which is slightly less expensive when compared with the industry PE of 32.58. The price to book ratio of 6.91, however, is a bit on the higher side. The company has a dividend yield of 1.73%, whereas the original promoters of the company don't hold stake any longer. The 52-week high is 322.95, whereas the 52-week low for the stock stands at 259. Now the final stock on the list is Tata Steel Limited, which is available at Rs 486.80 and the face value for it is 10. The symbol for it is TATASTEEL. Now Tata Steel Limited is a diversified steel producer engaged in the business of steel making, including raw material and finishing operations. The company's segments are steel and others. Its operations predominantly relate to manufacture of steel. The other business segment comprises tubes, bearings, refractories, pigments, port operations, and town services. Now, the steel sector would be a beneficiary of demand from infrastructure as well as from a stabilization in the Chinese economy. Capacity addition in the form of acquisitions and capacity expansion should help the company take advantage of the increase in demand. Now, as is evident from the 1-year chart, this company has been a nothing stock and not much wealth has been created here. The market cap of the company is 58,616.87 crores, which means that this company is also a large cap one. The EPS of 84.89 translates into a price to earnings ratio of 5.73, which is much cheaper when compared with the industry PE of 8.67. The price to book ratio of 0.82 is also on the cheaper side. Now one concerning factor is the high debt for this company, and the debt to equity here stands at 1.3224. The return on equity is 0.1585. The company has a decent dividend yield of 2.67%, whereas the promoter holding is below average and stands at 32.33%. Out of this, 3.51% is pledged. Total debt on the books of the company is more than 90,000 crores, whereas its 52-week high and low stands at 647.60 and 441.35 respectively. Please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. We'll be providing a link to the source for this video in the description section for you to go and build more conviction around your investment decision. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.